Hi, and welcome to this week's Fit Finance sessions. Now, if you're one of the lucky ones to manage to get a vaccine and survive all the way to minimum pension age, then you might get to take your pension. But there's been some new legislations which could affect certain people, and whether they should move their pension or not, and whether that allows them to take their pension earlier. So, Tim, why don't you tell us the rules, and Henry, you can give us some insight as to maybe the pros and cons of those different bits and pieces.
Yeah, sure. So predominantly it's also around this normal pension age. So basically the age upon which you can actually get access to your pension pots. At the moment it's 55. So typically at 55, unless you've got some sort of special scheme, but the typical age is 55. But moving forward by 2028, between now and 2028, essentially it's going to be pushed up to 57, which is back in the day, sort of in the coalition days, it was expected that this would happen to sort of bring it broadly behind the state pension age of 67 by 10 years. So yeah, it's not as simple as that. It's not just a binary, right, okay, well, by 2028, I'm going to be able to retire at 57. There is this protection that's coming out as part of the transition as well, where essentially it affects people with different ages, however, or differently depending on your age. Effectively, the long and short of it is, if you're already in a scheme which has a pensionable age of 55 or whatever it is, below 57 basically, then you, by staying in that scheme, you'll have protection and still be able to retire from that particular pension at that age. But if you then subsequently transfer your pension away, you'll lose that protection, unless it's part of what's called a block transfer, which is where you or at least two other people as part of the same transfer are being transferred in some sort of collective movement. But typically for most people out there doing personal finances and that sort of thing, that's not going to happen. So basically, if you transfer the pension, you'll lose the protection. So that's definitely something to be thinking about off the back of it. But yeah, I don't know, Henry, if you want to expand on that a little bit.
Is that for everyone or just people of certain ages, Henry?
Yes, that's right, and it doesn't affect me. I'm not that old. I'm happy to say. It is a fairly limited group. This is really going to affect, right? So it's people born between the 6th of April 1971 and the 6th of April 1973. Those born before April 71 will have already reached 57 by that date, so they will be able to take their pensions from 55 regardless. And those born after 1973 will not turn 55 until 55 until then, so they won't be able to take it either. So it's this little phalanx of people in the middle who we just need to be careful with and think about. And of course, for a lot of people, actually, they won't draw on their pension until they're probably long beyond their 57th birthday and way into their 60s. And so if that's the case, then of course it makes little difference. Really, this is going to be relevant to those who think they are planning to retire on their 55th birthday and happen to be born between 71 and 73. And for those people, yeah, we need to have a bit of a think, because whilst it might be the right thing to do to transfer a pension so you get different rights that different pension schemes will provide you with, such as being able to do flexi access drawdown, which a number of older policies won't allow you to do, or to get invested in a better investment mandate or a cheaper investment strategy or what have you. There will still be a number of reasons why transferring might be the right thing. But if that's going to cut off your anticipated retirement age of 55, then we need to have a think about how we're going to bridge that shortfall for a year or two when you get there. And that might be saving to ISAs, it might be saving to cash, it might be you working for another 18 months, unfortunately, until you get to 57, and then you can have all the money out of your pension. There's a few things to do, but it's just something that everyone needs to bear in mind.
I think it's quite rare that clients actually take all the money in one go anyway, even if they are going to maybe take a career break or wind down or even retire at 55. It's not like they're taking all of the money. So they might take a bit of tax-free cash early, but it's very rare that they're going to need all of that money. So whilst it's something to consider, isn't it?
Yeah, I think that's true actually. But of our clients, that's absolutely true. Very few of them will go and take all of their cash out at once. But actually, on the whole, I can't remember the exact stat, but it's something like 75% of people do take all the money out of their pension in one shot between the ages of 55 and 65. But on the whole, those pensions are going to be smaller. And I think the average pension size is about £63,000. So for those people, you can see why there might be an attraction to do it. But certainly you're right, if you've got $250,000, $500,000 in a pension fund, it would be unusual to grab it all and pay a massive tax bill at the same time.
I think that's also because people don't have advice on taking the pensions, and as soon as they can get their grubby mitts on it, they tend to take it. But most of us would know not to take all of that, particularly if you're still working because of the tax position. So, and maybe people in years gone by would have taken annuities, and therefore you crystallise the entire pot perhaps at that time. But I think it's very, very rare these days for people receiving advice to be bothered by those. Equally something to be aware of, and equally something to get if you're looking at consolidating maybe your existing pensions to a direct consumer, Hargreaves Lansdown, AJ Bell, maybe come get some advice first before giving up something that you're not aware of. Yeah, well, long way for us all to go to retirement, so nothing to worry about. The state pension age will be 95 by the time we're there. And I think we're probably going to talk a bit more about retirement income strategies and what does it actually mean when you get to retirement. So if a lot of our clients aren't taking all their money in one lump sum, what are they doing and in what way? So hopefully over the coming weeks we'll share with you some strategies and what some clients do and what some clients don't do over the coming weeks. But that's it from us this week. Enjoy yourselves, stay safe, and we'll see you next time.